Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, May 9th, 2019. Market's only been opened a little less than half an hour right now, but figured it'd be a good time to do an update. I posted quite a bit out there today. I shared my thoughts on static posts this morning, so if you're listening to the video, you probably already read those. Here's the QQQ 60-minute chart. We've now hit, slightly revised, slightly higher that level there, because NQ earlier, let me show you that, I mentioned that earlier. NQ had hit the 75.43 support level earlier, and so to be safe in case we were to get a bounce off there, I just wanted to revise that target, and we're talking pennies, not much. It was what was it, 182.97 or something like that before, so I revised it there. Now let's just look at where we're at now and take a look at what may happen with the markets. As I said, there's some cross currents today because we are coming up on supports, and each of the targets, that's why I list multiple target levels. It's an area where at the time, and again, initially at the time the trades entered, that's where I think we'd get our first decent reaction. I still think we'll get it here. There it is. You have a little gap right there. You can see the reactions. One reaction high, major reaction high, followed by a gap above that level. If you zoom in tight, see the gap, and then a back test of that gap. So I still expect this level to hold. But as I said, there's some cross currents because the three big fangs have broken down now. So and I shared my thoughts in the video yesterday. You're going to have counter trend bounces along the way in any rally or any correction, and it's up to you whether you want to, if you're not an active nimble trader, hold out. I still think the the final target will be hit. That's right now, that's still T3, but as an active trader, I think the odds are decent for a bounce here. And where it might go, well, I can tell you right here, there's a gap backfill. That would be a logical target and probably my minimum bounce target right now. As I always say, the charts are dynamic, and so is my analysis. So let's say Microsoft, Microsoft, Amazon, and Apple, all three recover those trend lines. I'm going to get to those in a second. We may see more of a bounce. And, there are no guarantees in trading. Maybe that's it for the whole correction and the market goes to new highs. I don't think so. I've said it before, this time is different because we've broken some major trend lines. We have divergent highs on the daily, things that we didn't have back in the other corrections along the way. So just wanted to kind of share my thoughts on where we might go, how far we might bounce. So probably somewhere up there at about that 187.66 level, somewhere in there. You can still see we had a even though I had it drawn as more of a megaphone or broadening wedge type pattern like this at the time, it's still a lot of the trades occurred right here. It seemed like a little toppy type action there, and then we broke down right here, and then we back tested it. So that would be a logical area, maybe all the way to about 187, we'll call it right now, again if we bounce. But I cannot overemphasize the fact that the markets are in a precarious position. We just hit what I believe to be that POR, point of recognition, where the dip buyers, they were buying this dip all the way down, and as I said recently, and they were, well, at first glance it might look like they were being rewarded, but the rallies were going lower and lower and lower, and then finally last couple of days, that's why I called it the point of recognition, we didn't have any, and they bought the bottom of that wedge a couple times and it didn't pan out. So that's where we're at. As an active trader, that's just me. I reverse long here to try to game a bounce, and I'll be back short again. But longer term accounts, I'll still leave some short exposure on there, IRAs and things like that. I don't want to bother messing with trying to actively trade. I'll just hold tight for now because the intermediate term outlook and possibly the longer term outlook still seems bearish. This was another view that I shared on the front page today. It's a 120-minute chart of QQQ. Has that same rough level where we had the first target at, which is horizontal support, and then we have this trend line here. You can see what I call a minor trend line. There's enough reactions along there to have that come into play. So it's intersecting support after the one of the biggest drops that we've had all year in the market. Now there's a lot of hot air, and again we broke some key trend lines here. These were just minor corrections, and at the time that's all we were looking at, little 60-minute patterns, 60-minute wedges. But again, this trend line also comes out to the daily chart, so this breakdown again, was much more technically significant. We were more overbought, more bullish sentiment. So all the reasons that we could continue down on through here. So let's not let me not mix words and say that although a bounce is likely, it is. The flip side is if we don't get it, we probably go down and have another sharp leg down. So if that makes any sense to you, that's the way I see it. SPY, I think I just showed you some levels on SPY. Yeah, here's SPY. Let's forget about all the other trend lines. Just let's look at these levels right here. We have that recent topping type pattern, consolidation, and a breakdown and a back test. In fact, perfect back test, and that's where probably the last good shorting op on SPY was on the back kickback to that 288.83 former support, now resistance. We've dropped to the next support level. You can see just like QQQ, we have a reaction high and a gap right there, and you can see the other levels. If this level can't hold, we'll probably take a quick trip down to the next level and possibly more. Remember, this market, again, a lot of hot air, and when you have a lot of hot air, you get a rush for the exits. Everybody was long thinking the market was going to go up forever recently, and so when they realized, okay, maybe that's not the case, you know, everyone sells at once, and that's where you get the powerful sell-offs. Okay, let's just take a look at the big three FANG stocks. I'll keep this video quick so I can get it out to you guys. This is Microsoft. Again, we can play around with this trend line. That's how I had it originally, and that says now we broke down, back tested. We also lost the gap support there. That was pretty important too. I mentioned that the other day. Back tested that level from below, and we're moving lower. So when I look at it this way, we're clearly below trend. If I want to give it the benefit of the doubt, if we can rally here and reverse soon off those support levels on QQQ and SPY, then we can extend this trend line out here, capture just that one other reaction other than the lows there, and maybe mount a reversal. So it's you know, not looking good for the markets, not looking good for these FANG stocks, but I'm just showing you levels that could come into play, and if they do, maybe they lead to that rally I just talked about. Bounce. Amazon, again, similar, because we had these, you know, these brief, you know, whipsaw signals or you know, the corrections back here in early March right there. And so the way I had this trend line before, and I think it's the best fit, is like this. Although, look, again, if I lower that, try to come and capture that reaction low, we're also at some price support on Amazon, so there is a chance here for a reversal, but the markets are going to need to giddy up soon, or else they're going to take out those trend lines, and then there's no more benefit of the doubt. That's just any way you slice or dice that the trend line off the December 24th lows has been taken out. So that one, I think, what did I already covered? Microsoft, didn't I? Yes. And now Apple. AAPL, if I can type here, there we go. Apple pretty much has already taken out my benefit of the doubt trend line. That was the, you know, last chance. Although it has some price support here, 197.70, and you have to, that's a pretty decent level too. So I say the same thing. You know, support is support until unless taken out. It may get taken out, and if it does, that's pretty darn bearish to see Apple come on down through all these levels. And remember, I said I would talk about this too, that you know, what are some of the signs that this might not just be another one of the corrections? This would be really the third correction that we've had off the lows. We had one back here, as well as in the broad market. And now, you know, I talk about the long-term scenario, long-term bearish scenario, and sticking with a trade. What would tell me that this is not just a run-of-the-mill correction? It's that support levels, which dip buyers should normally come and step in at, get cut through like they're not even there. When the market goes down, or a stock like a hot knife through butter, through support, especially support levels that buyers should be stepping in, like this one right here, that starts to give you some insight to what's under the hood in the market. And therefore, we could be looking at a much deeper, I mean, all along, you know, even the targets on the QQQ trade call for a deeper correction than we've had so far. But again, how we act around this T1 level could be very telling. So let's see how the day ends. Remember, there's a lot of time left on the clock today, so if we do reverse, those FANG stocks could get back and regain those trend lines, or form those new alternative trend lines I showed you on some of those. I think it was Microsoft and Amazon. And other than that, if you're, don't want to be in the market, you don't like this kind of price action, this volatility, looking for something else, I still, this is where, some of my funds are, especially long-term funds, treasury, things like treasuries and gold right now. They're flight to safety assets, if nothing else. So technical case has already been made, and there's a fundamental case from a flight to safety point of view where institutions and individuals flock towards gold and treasuries during times of market turbulence, and if nothing else, just a way to diversify. So we don't have the all-in yet signal or the all-clear signal for gold yet, but I'll keep updates on that. I'll keep that posted. All right, this is Randy Finney with the right side of the chart. Let's just watch how things go, and I'll most certainly do an end-of-day market update today. Have a great day.